Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of the corporate world. And today we're looking at Spring Valley Acquisition Corp E. It seems like they're getting ready for a big reveal, and we're here to break down what it all means. Before we dive in though, if you enjoy getting the real story behind these filings, make sure you're subscribed and hit that notification bell. And for even more exclusive insights and to join the conversation, check out our Discord server. The link is in the description below. This document is basically an update on what's happening with Spring Valley Acquisition Corp, or SVII as they call themselves. It's like a company's diary, letting everyone know about significant events, and this one is dated August 29th, 2025. They're a company that's involved in acquiring other businesses, a special type of company called a SPAC, which stands for Special Purpose Acquisition Company. Think of them as a blank check company, created to merge with another company. Now, let's talk about what they actually offer to investors. You can see here they're dealing with units. Each unit is like a package that contains a share of their company called a Class A ordinary share of right, which is a bit like a coupon, and half of something called a redeemable public warrant. WW way for the company to raise money by selling these combined packages of ownership and future purchase options. This detailed description tells us exactly what's in those units. So, one unit has one Class A ordinary share with a really tiny face value of 0.001. That's less than 1/10 of a penny. Then there's one right and half of a redeemable public warrant. This breakdown is important for understanding how the company structures its financing and what investors are actually getting when they buy these units. Here's what those rights are actually good for. They give you the ability to get 1/10 of a Class A ordinary share. So if you have 10 rights, you could potentially get one full share of that Class A stock later on. It's like a small piece of the pie, giving you a future claim on the company's stock. And for the warrants, they're quite interesting. Each full warrant, remember you get half a warrant in a unit, allows you to buy one Class A ordinary share. The key here is the exercise price of $11.50. This means that if the company's stock price goes above $11.50, and if you still hold the warrant, you can buy the stock at that. $11.25 goes Mies pre-merger companies, as it gives investors a way to benefit if the acquisition is successful and the company's value increases. This tag specifically refers to their Class A common stock. It's just a way of categorizing this type of security for reporting purposes. This simply indicates that the numbers we're looking at are counts of shares. This section is all about how they're sharing information with everyone. Regulation FD, or fair disclosure, means they have to make sure all investors get the same important information at the same time. So what they're announcing here is that they have a new presentation to share with some of their shareholders and other interested people, and they're attaching it as an exhibit to this report. This presentation likely contains updated information about their business or a planned merger. This is the main event. They entered into a merger agreement back on July 30, 2025. This means they plan to combine with another company called Eagle Energy Metals Corp. So SVII, the SPAC, is going to merge with Eagle. This is what SPACs are really all about, finding a company like Eagle to merge with and take public. So that presentation we just mentioned, Exhibit 99.1, is the key piece of information they're releasing today. It's an updated presentation, is likely where the real details and the story of the merger are laid out. It's essentially a more detailed look at their plans and what to expect. This part is important for anyone who wants to dig deeper. They're telling people where to find more information about this upcoming merger. They filed something called a registration statement, which is a big document that the Securities and Exchange Commission, or SEC, reviews before a company can sell its securities. This registration statement has a preliminary prospectus and 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 a preliminary prospectus. This confirms they've filed their Form S-4 registration statement with the SEC. This is a crucial step because it lays out all the specifics of the proposed business combination, which is the merger with Eagle Energy Metals Corp. It includes details about what stock will be issued and how shareholders will be asked to vote. They are also informing shareholders that once the SEC approves the registration statement, they will mail out the final proxy statement, which will contain all the important information needed for shareholders to make an informed decision on the merger. This section addresses who might be influencing the shareholder vote. It tells us that the directors, executives, and employees of both Eagle Energy Metals Corp and Spring Valley Acquisition Corp could be seen as participants in encouraging shareholders to vote a certain way on the merger. They're essentially warning that the people running these companies have a vested interest. This is a standard legal disclaimer. They're making it clear that this document isn't an official sales pitch or a request for votes. It's just providing information. They want to avoid any misunderstandings about making an offer to sell or buy securities, and they're saying that any sale of securities in connection with the merger will only happen in a way that follows all the rules and is legal. This is one of the most important sections in any corporate filing. It's a warning to investors. Basically, they're saying that some of the things they talk about in this report aren't facts about the past. They are forward-looking statements. These are predictions or expectations about the future, like how well the company will do, what the market will be like, or the success of their plans. They use phrases like expect, anticipate, or will likely result. The key takeaway here is that these are educated guesses, not guarantees, and the actual results could be very different. This is where they list the potential problems. First, the merger itself might not happen, or it might take too long, which could hurt their stock price. SPACs have a deadline to find and merge with a company, and if they miss it, they often have to shut down. This is a huge risk for investors who have put their money in. This is another big one. Even if the merger goes through, the company might not be as successful as they hope. They might not achieve the expected growth or make the kind of profits they predicted. This is a common pitfall when companies combine. This highlights the unpredictable nature of the stock market and the world itself. They're saying that the stock price of the new combined company could swing wildly because of all sorts of things like new laws, technological shifts, natural disasters, or even global political tensions. This speaks to the inherent uncertainty of investing in any company, especially one that's going through a significant change like a merger. This is a real clue about what kind of business Eagle Energy Metals Corp is in. They are directly exposed to the price swings of key commodities like lithium and uranium. If the prices of these metals go up, it's good for them, but if they go down, it can hurt their business significantly. This makes them a cyclical company, meaning their performance is tied to broader economic trends and supply and demand for these specific resources. This is the very end of the report where they list the documents that are officially part of this filing. And here it is again, Exhibit 99.1, the investor presentation. This is the document that contains the actual meat of today's announcement, likely detailing the proposed merger with Eagle Energy Metals Corp. This is just the official sign-off by the company's authorized representative. And here we see the signature of Christopher Sorrells, who's the Chief Executive Officer and Chairman of Spring Valley Acquisition Corp. 2. His signature means he's officially confirming the accuracy of this report on behalf of the company. Now, let's talk about what this all means. Spring Valley Acquisition Corp. EI as a SPAC is designed to take a company public through a merger. They've identified Eagle Energy Metals Corp. as their target. This is a big deal for both companies. For Eagle Energy Metals Corp., this is their ticket to being traded on a public stock exchange, giving them access to more capital and visibility. For SVI shareholders, the success of this venture hinges entirely on Eagle's performance and the execution of this merger. The risks mentioned are pretty standard for SPACs and companies in the mining sector. Commodity price fluctuations, especially for something as volatile as lithium and uranium, are a major concern. Regulatory changes, operational challenges in mining, and the general uncertainty of exploration activities can all impact the business. The note about the PIPE financing means they might need additional investment from private investors to make the deal happen, and if that funding doesn't come through, the merger could be in trouble. The company's strategy here is pretty clear. Merge with Eagle, capitalize on the potential of energy metals, and grow. The question for investors is whether Eagle Energy Metals Corp. Is a strong enough company with a solid plan to overcome the inherent risks of the mining industry and the complexities of a SPAC merger. The presentation, it's hard to say much more, but the filing itself signals a significant step towards this potential merger actually happening. What's your take on this SPAC's move to merge with Eagle Energy Metals? Do you think this is a winning combination, or are the risks too high? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate intelligence. And don't forget to join our Discord community for ongoing discussions. Thanks for watching, and we'll see you in the next one.